Hello again, and a very warm welcome to another candid interview between me, Natasha Kaplinsky, and an industry legend. This time, it is my very great pleasure to introduce Richard Davies, the Chief Executive Officer at business bank Alaka Bank. Now, Richard's career has spanned various positions at HSBC, TSB, and more recently for Revolut, where he still holds a non-executive director role. Now, Richard has jumped recently back across the fence into the SME space, and he looks to build now a successful offering to help firms not only tackle the COVID crisis, but to help build a brighter future via collaboration and innovation. Richard, that's a good introduction. I'm sure I haven't done you even half the justice that you deserve, but good to speak to you. Perhaps you could start by bringing us up to date with where you are in your career and the highlights to date.
Wow, thank you, Natasha. That's very kind. So, yeah, I mean, just brief potted history. I started life as a strategy consultant, then worked for a couple of major banks, Barclays and HSBC, but also a couple of fintech or challenger banks, so Oak North and Revolut. So quite a varied career. And as you say, I was with Revolut up until about 3 months ago, when I took sort of jump back into the sort of the banking side of the fence rather than the fintech side with Alaka, though very much trying to sort of, I guess, use a lot of the lessons I've learned with places like Revolut to help really create a sort of leading edge bank.
Interesting that you've moved during the pandemic. I'm sure that's had its own challenges, but no doubt they have wanted you at Alaka because of your vision. What vision do you have for the bank going forward?
Yeah, so I think for me, the pandemic has been clearly devastating for many people and many firms. And I'm an economist actually by training originally, and there's something about crises that, for me, you've got to work out how you build the future of them. They can often be, as I say, devastating, but equally they can be sources of innovation, of creativity, and of growth for the years ahead. So one of the reasons I was really keen to come to Alaka was with this crisis. How do we ensure we see that sort of that fuel for hopefully the economy for the future, and help some firms to really build on this and to come out of this stronger than ever. And what I'd seen in the market was just a lot of problems around supply of finance. And supply of finance is so crucial to that sort of economic growth. So we want to really make sure we help address those issues. We are a fresh bank. We haven't got any sort of issues from the past behind us. So be it in terms of great digital processes, be it in terms of deep understanding of clients, be it in terms of providing that finance to help fuel growth. We just think there's a real need right now for someone to help. So it must be like white knights coming out of this crisis.
Was it always your plan then to hop back into the business banking space? What tempted you back over that line?
Well, this isn't. I had a great time at Revolut, and actually, I'm still doing some work with Revolut now. I'm still employed as a non-exec director, and it's an amazing company. That I mean, just the growth, the expansion is mind-blowing. I sort of always think a year there is like 5 years in the wider world. I mean, so I learned tons from that, and particularly I think around sort of tech and data side. So seeing a tech business doing financial services as opposed to a financial services business trying to do tech was quite revelationary. But no, I love small business banking. I love business lending because I just think it's so attached to what happens in the real economy, and that was why, as I mentioned, with this pandemic, I just felt there was such a great need as well as opportunity to go and do something new in this space.
And we can pick up on that point a little bit later on. But for the time being, Alaka Bank, they're very much in the market, aren't they, to transform the business banking space. In your eyes, what does that look like, and what are the steps needed to be taken to achieve it?
Yeah, so I think the first point I should just make is that SME is a very wide sort of segment, so it's important to focus. And I think there's been some amazing work done in the last few years by the likes of Starling and Tide in the very smallest SMEs, what might be called micro enterprises, so a freelancer or a sole trader or a couple of employee business. which is by far the biggest part of the market by volume. So there's maybe 5.5 million businesses in the UK, and 90 plus percent of them are these one person or couple of people businesses. Now, what I think's had less focus is the what I call established or mid-sized businesses that maybe got 10, 20, 50, 100 employees. And actually, because they're creating, I guess, more value for business, they're actually perhaps 2/3 of the economic output of SMEs. And so it's a sort of big segment value-wise, even if it's smaller volume-wise. And so the piece we are completely focused on is that established, mid-sized, growing SME that's employing quite significant numbers of people. And I mean, there we think there's a real need to combine both technology, but also importantly, human relationships. We don't think that if you've got a 50-person company, you're just after a mobile app. You're after a good range of technology as well as a great person to help work with you on that. So we think that that combination of human relationships and digital technology will be a key ingredient for really transforming this segment. It's also important to say that this isn't about some traditional play. We're not having branches or anything like that. It's about how do you have that, I guess, perhaps older value of relationship, that person that understands you, understands your business, but delivered in a very, very modern way.
Okay, thank you very much. Let's talk a bit about the pandemic now, shall we? The government have come into play, haven't they, with a whole host of support packages for businesses. With both your business banking and fintech hats on, what do you think of the government's response to coronavirus, specifically with SMEs in mind, of course?
Well, I think it's been, well, I have a lot of sympathy for the government. It's been, wow, just so tough, I think, with the speed with which this thing hit in February, March, and the scale of impact from it. So I think the initial response in terms of getting support out there, hard to fault, really. Just really managed to get support, and we haven't seen a massive wave of businesses collapsing on the back of that. I mean, clearly you've got two schemes. You've got the bounce back loan scheme, and you've got the CBIL scheme for businesses specifically. There's also clearly things like furlough and so on to support employees. Now, so I think overall good first response. I think the question is, where do we go from here? And there's talk of extending these schemes in the new year. I think there's a very big question about, in the future, how does this debt get repaid? Yes. And what are the problems that are going to go with that? So I've seen various articles in various papers talking about possible up to 60% of the bounce back loans may not get repaid, up to 5% may have been fraud. I mean, there's definitely some issues lurking here. Is probably inevitable if you have a very fast deployment of support to a market. And I think it's really important for me that's done well. There's really good treatment of the businesses that have borrowed, that if they are struggling to repay, that there's appropriate work done to ensure that the loans are restructured or made more affordable, extended, and so on. And clearly, if there has been fraud, that is chased down very hard to make sure the money's got back to the taxpayer. So I think I credit the government on the first step in all this. I'd say that there's probably 3 to 5 years of this to play out, though, in terms of getting the money that was put out there sort of paid back in a way that's good for businesses as well as good for taxpayers. So I think the hard work is still ahead, to be honest.
3 to 5 years, I think that's fairly optimistic, but there you go. Let's stick with that. A bit more about COVID now and the disruption that it's caused to the business lending sector. Looking forward, what does this look like to you from where you're sitting for the next 12 to 18 months?
Yeah, and I think this is such an interesting question. And having jumped into Alaka, it's probably unlike I could have imagined before coming in. I think you've got three effects going on in the market in terms of lending. One is lenders pivoting to the government schemes, the bounce back loans and the CBILS that I just mentioned, and that's been huge actually when you look at the volume of government backed lending that's gone out. Two has been then lenders who've got significant existing books having issues around forbearance and repayment of those loans. So maybe they did a loan in 2018 and that customer was having problems repaying during the pandemic. So that's quite a significant impact. And the third one would be non-bank lenders. So banks can clearly fund themselves via deposits, but if you're not a bank, you have to fund yourself with wholesale finance from either large banks or the public markets. And I think there's been quite a bit of tightening up of that over the course of the pandemic. I mean, all three of which really, actually, in what we do at Alica, we've seen just a massive drop in the supply of finance for the types of companies and the type of finance that we provide. Because all three of those effects have either made people focus finance on the government schemes or has made people pull back from the market because they've got forbearance or funding issues themselves. So what does that look like? And I think, yeah, and probably half of the supply in our market is currently missing from where it would have been 12 months ago. And we're doing companies that are, if you look at the market, you've perhaps got 30% of SMEs that haven't been badly impacted by the pandemic. They're still trying to execute their plans to grow, etc. They're not eligible, therefore, for a government support loan. And yet, a lot of the supply is gone from the market. So it's almost counterintuitive that the companies that are least impacted by COVID and are trying to grow have the worst supply of finance right now.
It's a very complicated picture. I think it's going to take an awfully long time, isn't it, to try to resolve and unpick, let alone repay. But looking ahead and the long-term impact of coronavirus on the SME banking space, do you feel it's possible to shed any light, any predictions?
Yeah, I mean, you mentioned earlier that 3 to 5 years may be optimistic on paying back all this mountain of debt, and I mean that's probably fair. So I think that is one of the big issues facing the lenders as well as the customers is how do you work through what is, I mean, I think I'm right in saying over £60 billion of debt. That's going to be a huge thing. That, as you say, may well be more than 3 to 5 years. I mean, on a more positive note, I think hopefully, and I see some signs of this already, we will see a step change in the technology adoption, the digital adoption by SMEs. I think I saw some research recently that suggested 30% of SMEs have already changed a number of their ways of operating or their ways of marketing, etc., to adjust to the pandemic. And I suspect more fundamentally than that, you'll also see some deeper technology adoption in terms of, say equipment that helps things operate remotely, or machinery that reduces labour cost, or whatever it might be that comes out of this. Which I guess back to the calls from optimism, and something we're very keen to play our role in is how do you ensure there is that finance available for SMEs to adopt technology and grow their business. And I mean, we've had stagnant productivity growth for a decade or two now in the UK. So I mean, can we use this as a spur to step change the use of technology in SMEs across the UK? I guess is the question I'd like to hope is a good thing that comes out of this.
Let's hope so. You mentioned a short while ago that you're relatively new at Alica Bank. Nevertheless, I'm still going to ask you for your views on how the bank has developed over time and your key business strategies to date as a company.
Yeah, so the bank, I mean, it's a long process to get a bank set up. The bank was fully authorised by the Bank of England just over 12 months ago, and sort of went live thereafter. So we're quite young in terms of as a customer-facing bank in the UK, and I'd say we're really now in the sort of scale-up phase, or just gone into that scale-up phase of you've started, you've operated for a year. Your sort of training wheels are broadly being taken off by the powers that be, and you're able to start to grow the bank, and that's really important to ensure you achieve profitability, viability, which is clearly key to a bank's future success. So I'd say we're very much in that phase right now. In terms of the strategy, I mean, there's clearly some big name players that have entered via payments. So your Monzo or your Starling went for payments first and then have moved into lending quite recently. Whereas we've very deliberately started with lending. It's sort of a quicker route to actually achieving a viable bank. And also for this target market, I'm talking about these mid-sized SMEs that are trying to grow. Lending is actually the thing they care most about. It's the lifeblood of their business ultimately if you're trying to expand your business. So hence we started with lending, and we're currently live with we're live with one of the biggest products in the market, which is essentially lending secured on property, and we're about to go live with the second biggest product in the market, second biggest need in the market, which is lending secured on equipment like vans or tractors or forklifts or this sort of stuff. So very much taking a lending-driven strategy into the market.
Okay. Richard, you've talked very eloquently about the potential opportunities that COVID might pose and who might benefit by taking advantage of those. What would you see then as a successful future looking like? And crucially, what part would open banking play in that journey?
Yeah, so I mean, for us, we want to expand to be able to offer that human relationship plus digital technology that I mentioned earlier. And we want to expand beyond the lending products I was just describing to also be able to help customers with their payments needs. So we can offer essentially a full service and be a true alternative to an HSBC or a Barclays. So that's sort of over the next few years, we're planning to move towards that. Now, open banking. I mean, I love open banking. I was involved back with the CMA right at the start of this journey. Big fan of it. I think it's now in the early stages of traction and adoption, which is great. And I expect to see that progress a lot over the next 5 years. So it's definitely a key part of our thinking as we look forwards. Now, I'd say there's two parts to that in particular. One on the lending side. I think to anyone involved in lending, this wouldn't be a surprise, but we plan to use open banking information to help our lending decisions. Right now, our lending is primarily through intermediaries, so it's not really, we've not got direct customer access to do open banking. But as we move into direct customer lending next year, we'll definitely be using open banking to bring in wider information about the customer to go with both information they provide you via other documents and things like credit reference agencies. Then I think beyond that, payments is very interesting. So as mentioned, we intend to move into payments. And as we have that payment account, it'll almost certainly start off being a secondary account rather than the customer's primary account. And so things both like account aggregation, so sort of allowing the customer to be able to do things from one place across their accounts is interesting. But also, I mean, the consultation paper was released pretty recently around aspects like variable recurring payments and sweeping. And again, I think those are very interesting features for us to build into our sort of payments proposition over time. So yeah, definitely a big fan of open banking and pretty central to our plans.
Okay, well, let's talk about that proposition that you've just highlighted. How do you feel at Alika you're offering a different proposition to your industry counterparts?
Yeah, and let me make this quite specific to the segment that I'm playing in, i.e. that sort of mid-sized growing SME, because it's quite hard to generalize it more widely. And there's some great work going on in many parts of the industry. And I think in this segment, though, it's quite backward, I'll be honest. So I think we'd say two things. One is the application of data and technology to this segment that's just not had enough focus in the past. It's very much straight to paper rather than straight through processing, I'd say. And then beyond that, more generally on the proposition, it's that combination of human and digital. How do you have the person that understands you and your business, but underpinned by technology that allows that process to be quick, easy, efficient, so that the human beings can spend a lot of their time with clients. I think the problem in a lot of traditional banks is the human beings spend all their time on admin activity. It's rekeying things, it's working with clunky systems, and so maybe 15% of their time is with the clients. We'd like to be dramatically higher than that. 50%, 60% of our people's time actually spent with clients, which is what the people enjoy and it's what the clients want. So for us, it's all about that. How does the technology enable a human?
Okay, that's great, and leads me perfectly on to my next question, which is all about these new buzzwords that we're speaking about. Collaboration is not a new one, but it's certainly a well-used one at the moment. Can you give me some examples of some SMEs that you have collaborated with, and how your expertise has essentially helped them to transform and grow their business?
Yeah, definitely. So we actually put out a really nice video. I was so humbled by this actually on LinkedIn a week or two ago, sort of just summarizing a case study where we just got such great feedback from the client. So I was kind of completely humbled by it. And it's a company called Glazing Vision. They're a sort of leading manufacturer of glass roof lights based in Norfolk, employing around 100 people. So they were looking for a £1.9 million loan to sort of fund their expansion plans, and been led down the garden path, sadly, by a number of banks over quite a while. And so yeah, we got involved and worked with the management team, with their advisors, with their lawyers, and so on, to pretty rapidly complete that loan end to end, and really support their sort of expansion plans in what are, I'd say, uncertain times where sadly the supply of finance for these sort of companies has gone away. So I mean, I think really great collaboration, because you've got many parties involved in this. You've got management team, you've got the solicitors for the client, the solicitors for us, you've got the valuers for the client, you've got the financial advisors for clients, then you've got on our side internally quite a few people as well. So I think collaboration very much is the watchword. The key for me is then how do you make that as replicable an experience as possible, so that's where the role of technology comes in, I think, to have the best possible processes to underpin that technology, to underpin that collaboration, rather than it being just a one-off chance event that happens because of some great people involved.
Yeah, and it must be hugely fulfilling for you to see a deal like that come through. But then let's pick up on the technology question. What are the main technologies that you are utilising to help work with your customers?
Yeah, so right now we are very focused around primarily web. So again, you can overestimate how much impact fancy things can have in the very short term. If you can get a really good portal that creates a really simple, straightforward application process, and then that portal is plumbed into your own systems to allow efficient processing of the applications, it gets you a hell of a long way, and much more so than I know doing something blockchain does in the short term. So I'm all for the simplest possible solution to the customer's problem that creates the best possible output. Now, so yeah, we have feedback saying our portal is the best in the market right now, and I'm very proud on that. We continue to invest in it to ensure we get that better and better still. I think beyond that, I mean, as we move towards payment accounts, we have got a mobile app we've already got developed. We're going to keep iterating that to get the best possible functionality on it. And then I think getting slightly fancier, I'm very interested in WhatsApp as a channel. I think it's something that a lot of people use in their normal lives, and I'm a big fan of providing people with things that just they use already and they find it easy, convenient, rather than trying to impose something on them. So very interested in how do you combine WhatsApp into a relationship-based banking proposition. And the final thing I mentioned, trying to get actually a few more buzzwords in for once, embedded finance. So I think this is now the industry term for what I would call loan by API, but essentially the ability to sit your own lending within someone else's web or mobile application. So we can put an equipment finance loan in the vendor of the equipment's website or similar. So again, back to this theme of convenience. I hate technology buzzwords for their own sake, but I do like this concept of embedded finance because of the fact that the customer is trying to buy a piece of equipment. give them the finance there and then when they are looking at that piece of equipment, rather than having it go to a separate application journey on a separate bank website, etc. So yeah, for me, you've always got to start with the customer, think hard about how the customer wants to do things, and design around that, rather than start from technology and try and it's kind of the hammer and nail thing, right? Don't try and sort of just get a hammer and go around looking for a nail. So yeah, I think plenty to do there, but I do get a little frustrated by some of the sort of people who go technology first as opposed to customer first.
Yeah, and why reinvent the wheel? Absolutely. Richard, you mentioned a short while ago that actually Alitech's a relatively young company, but to take market share, scaling up absolutely must be featuring very large in all of your strategy planning. How are you planning to do this, and what timescales are you working to? How ambitious are you?
Yeah, first I say very ambitious. I mean, listen, I was with Revolut and we just raised $580 million to expand. So that was it was quite a hard decision to come out of that and come to a bank that had just started. Because one is sort of conquering the world right now, and the other is at earlier stage in its journey. So yeah, listen, I've got big ambitions to ensure this is the category leader for the types of clients I'm talking about within the business banking industry. And we're currently raising a £100 million funding round to support that. So a lot of activity going on to support that now. And that's almost like the first building block in scaling up, is ensuring we've got the funding in place to do that. So we're making good progress on that and looking to conclude it over the next month or two, realistically. And that then gives you the fuel to really ensure you can expand beyond that. But we are sort of scaling outside in the background. We've continued to hire people the last 2 or 3 months since I joined, building out, for example, some data engineers, some of our business development people, relationship management people. So some good development of the resources, and then also on the business side, we've seen very, very strong demand from clients. So that lending growth is for sure there. And coming back to the fundraise, that's why we really want to get the fundraise done, because with the fundraise we could probably double or even triple our lending volumes next year, based on what our current run rate, because we're almost having to slightly restrain the demand right now until we've done the fundraise. So yeah, I think tons of work going on right now to ensure we are scalable across those 3 fronts. So sort of people who ultimately do everything, fundraising and lending.
Without wanting to push you, what's your timescale? What are you working to? How do you judge your success?
Yeah, well, in the very short term, for me, my number one priority is this fundraise closeout, which, as I said, is going quite well, and we're hopeful to be there in a couple of months' time. Beyond that, I'm a big fan actually of quarterly objectives. So while you have a long-term business plan, I'm a big fan of sort of you live quarter to quarter when you're in a scaling organization. I think if you set just a 12-month annual plan, it's very rigid and doesn't allow you to flex to circumstance. So yeah, we sort of have quite ambitious objectives each quarter, and we'll kind of set Q1s over the next month as we push on. Hopefully, with the fundraise, as I mentioned, with clarity on that, which will allow us to then sort of follow through with further resourcing to help us scale up.
I'm sure fundraising in this market is not an easy thing to do, but after the last financial crisis, Richard, we saw a fair bit of M&A in the market, didn't we? Do you predict more of that this time round?
In a word, yes. And actually, coming back to fundraise, I think there's some linkage there where I think a lot of investors are they've kind of got wary of people that are looking to build or have built a subscale fintech or challenger. And I think there's a lot of view out there amongst investors that there will be consolidation in the market. Now, this is something I've been thinking is ripe for a long time. We had almost fintech 1.0, I guess, coming out of the last global financial crisis, where a lot of companies started in 2012, 2013, 2014, and I guess some of those are reaching a point of either they've reached enough scale or they're going to sort of fold into something else. You saw RateSetter get bought by Metro, for instance, recently. I think though, more widely in the challenger bank space as well, there's quite a number of smaller challenger banks, and yeah, I think there's definitely a lot of investor interest out there to say, how do you bring together a number of these players? How do you create some consolidation in the market? Some of those players might be distressed coming out of the crisis, but even if they're not distressed, it's ultimately you've got to have scale. I mean, I think Revolut sort of exemplifies that, where they're sort of, because they've now got a whatever it is, 12, 13 million customer base, they've got massive scale to drive great deals with their suppliers, which they can pass on to customers, and you create kind of a virtuous circle effect in terms of scale in financial services. So certainly something we are interested in. We've said publicly that we would consider, post the fundraise, some M&A activity ourselves, as we try and be one perhaps of those consolidators in the market.
Interesting. Watch this space. Well, then that links me to my final question, which is, can you give me any exclusive? As a journalist, obviously always looking for a bit of a story. It'd be wonderful if you could reveal something terribly exciting, or I should think it's all under your belt. But for the next 12 to 18 months, what can we expect from you?
Yeah, listen, I don't know quite how exclusive it is, but I don't think it's been talked about that much. So, but I have mentioned it in this interview already. So, I mean, we're about to launch our equipment finance. So, as I mentioned, sort of vans or light commercial vehicles or yellow plant financing proposition. So, we're very excited about that. That launches in a couple of weeks, actually. So, very soon. And then the other thing which I'm very excited about and we're working hard on right now is our entry into payments. So that's mid next year. It's not quite as soon, but is our sort of other really big thing we're going to work on over the coming months. And it's exciting for me because it's our first step outside of lending and starting to bring that sort of fuller service banking proposition to bear that will allow us to be that true relationship bank for the future. And I won't say too much about it. We are trying to think about some very interesting and disruptive elements there that sort of not just a me too of let's copy what some high street banks done already. No interest in going there. It's very much how do we bring something that's going to provide both, well, really solve a problem for the sort of target customers we're looking for, as well as do it at a really great price point.
So watch this space.
Definitely.
Richard Davies, it's been fantastic to talk to you. Thank you very much indeed for your time and best of luck.
Thank you, Natasha. It's been a pleasure.